All right. So, super excited about today. As we continue our Dragon interview series, we have today, hands down, one of the best traders and investors I've ever come across. Someone who's become very much a close friend, a bud, a mentor as well. He's returned about 6x, going on about 4 years of running his own money. Kind of does it all, everything from allocating money to other investors, as well as running him directly himself. Please watch this great interview with my buddy, Geo Chen.
Thanks, Kay.
Geo, welcome.
Yeah, I'm so glad to be here.
Yeah, super stoked, man. There's like so much to cover, and obviously, as you know, as we always do, we'll freestyle it a little bit. But I thought maybe let's anchor it to give some people some structure, maybe around 5 key areas. So obviously, let's get your profile and background, hear about your come-up story, if you will. I know you've been in banking for quite a few years on the trading side. And then maybe we'd get into a little bit more kind of macro, not so much ideas, but your thoughts and framework on, being a global investor, allocation, how you kind of think about it. No need to share any secret sauce, but, just a little bit of kind of the plumbing, so to speak. And then third, always have to talk about trading, the psychology, what makes good traders versus bad traders. You've obviously sat on a lot of desks and have seen a lot of people come, and most of them go. So I'd love to get your insights on that to share. Fourth, definitely have to get a plug in on the foundation you started, as well as also your interest and passion in, I think, the conservation side of things. And then obviously fifth, maybe trade views and big picture ideas as we go into kind of 2021. We're obviously shooting this after, the new president of the United States of America. And then, of course, the news that we are going to be getting some vaccines on the horizon. So a lot to cover. How's that sound? All good?
Sounds good.
All right. So profile background. What's the come-up story? How did you get into finance, and how did you kind of journey to, sitting across from us here in Singapore?
Yeah, so I've been a trader my entire career. I started trading back in 1999 during the dot-com bubble.
Yeah.
That, got me sucked into the world of trading. And I turned a $6,000 account into $800. So that was my first lesson. But ironically, it didn't, sway me from trading. If anything, it made me realize the power of the markets to create and destroy wealth.
Yeah. Well said.
So after that, I started working at the Royal Bank of Scotland as an FX trader.
Yeah.
I'd applied to trading positions all over the street, and it just so happened that I was studying in London during my junior year of university.
Yeah. What did you study, by the way?
Economics.
Economics, all right.
Yeah. So I was studying at LSE during my junior year, and I got an internship at RBS, and ended up working for them for 10 years. Yeah, so I started on their FX trading desk back when there were 20-some, 30 traders, in FX on the floor.
Different genre, different regime, basically, from where we are today, right?
Yeah, it was a different time.
Yeah, awesome. Okay.
So I moved to Singapore back in 2010. Kind of wanted a change of scenery, wanted to try out Asia.
Yeah.
And to be honest, at the time, the markets were a little difficult. We were coming out of the financial crisis, and the regime of the markets had totally changed. And banks were cutting people like pretty quickly.
Yeah.
So I thought Asia would be a good place to position myself, where
so this
talent
was
is
some
scarce.
risk management in the career side of things, potentially, by switching geographic locations.
Yeah. And so I was at RBS for a couple of years, and then moved on to Credit Suisse,
Yeah.
where I was running the developed market spot and forwards book.
Okay. So predominantly the whole time on the banking trading side of the desk was kind of currencies, forwards, that asset class in essence, right?
Yeah, actually up until Credit Suisse, I'd only been doing spot.
Gotcha.
And then when I arrived at Credit Suisse, my boss made me the head of the desk, within like 2 weeks. And I was running forwards in addition to spot, which was something pretty new for me.
Yeah.
And I had this mandate that allowed me to trade rates in addition to FX. So I was like, all right, let's try this out. Let's learn this new market.
Love it.
And it turned out that rates has been probably my most profitable asset class since then.
Awesome. Now we got to ask, like, how'd you get to be head of the desk in 2 weeks? Was it just circumstantial serendipity? Someone got chopped, or you did something that was super impressive, or?
I think it was a lot of luck.
Yeah.
And my former boss, Samir Taneja, had a lot of faith in me.
Yeah.
And so, you know, I'll always be grateful for that chance.
Awesome.
And I think everyone in his career needs, you know, somebody to take a leap of faith at some point or another. And so that was a good one for me.
So you studied U.S., London, started your career in London, and have been in Singapore, Asia ever since, right?
Yeah.
On, I guess, the next kind of topic, which is definitely gonna go a lot longer, and maybe we should break it down into your capital that you run internally, as in directly yourself, as well as kind of externally, as in you allocate out. You know, I find, generally speaking, that trading, investing, as well as capital allocation are all three very different things. They also respectively three very different things to be kind of good at. And you know, you kind of have this army of one family office that you've been doing at Stratosphere Trading. So we'd just love to get your view of how you kind of approached it, and you know, how the hell does someone return plus 6x in a little bit close to kind of 4 years, and as we talked, you know, off camera, you know, fairly well distributed, right? So just curious if you could share some kind of your thinking there.
Yeah, so back in 2017, I left banking to basically trade my own capital. And at the time, the plan was to just trade futures and in FX, which is what I've been doing my whole career. And you know, it was going great. I mean, I made like 50% in my 6 months. But I realized that with global macro and trading FX, there's a whole lot of capital that's not being utilized. So not only was there not a lot of capital not being utilized, but all the returns I was making was during periods of high volatility and really violent risk off.
Got you. So certain pockets in the year, so to speak.
Yeah.
Right.
Yeah. So I was trying to figure out, how do I utilize this capital better, and how do I make money when it's not just, you know, when the world's not ending?
Yeah.
And the answer was to allocate capital to managers, whether it's venture or hedge funds or PE, who could just, you know, invest that capital on a long-term basis. So I could participate in that secular growth of the markets or technology or innovation, alongside what I was doing in global macro.
Okay. So is this optimization of combination of capital, combination of also time, right? Yeah. So you kind of always had part of your capital kind of working for you. So from the perspective of, you know, you're obviously financially independent, you've ticked that box. So I don't want to really necessarily mention numbers, but, you know, assuming that 100% is what you allocate to external and 100% is what you run internal, and I also believe internally you run a trading as well as an investment, you know, more long-term book. Let's talk about the external. Like, how do you think about that 100% in regards to how you allocate it from, you know, a VC, a hedge fund perspective, and maybe even a startup perspective?
Mm-hmm. Yep. So the way I think about allocation, first of all, I want to get a healthy allocation to just global equity markets. So I invest in hedge fund managers who can help me get that allocation and deliver alpha. And I've actually learned a lot from speaking with these managers, and that and what they've taught me over the years has informed a large part of my own, stock picking and my own portfolio.
So it's almost like there's also this strategic kind of relationship because you're learning also from them as well and optimizing what you're already doing. Yeah.
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 And I like other asset classes like VC, PE, and real estate just for the different return profiles.
We're both in
that they
SoGal as
deliver.
well. Got to get that plug there, of course.
Yeah, SoGal has been incredible.
Yeah.
I like VC because I'm investing in groundbreaking entrepreneurs and innovation, on the ground floor. Real estate, I love the risk-adjusted returns, and just having investments in hard assets.
Yeah.
And private equity is great as well because you're transforming companies and just making them run better.
Yeah. And again, from and there's no formula to this, but so I'm curious. Do you look at it from I had $100. I'll put in $15 to $20 into these 4 or 5 different VC kind of plays. Now I want 30% into real estate, or do you more just take it as the opportunity kind of comes along and it's not necessarily it has to wear a PE hat or a VC hat? I guess I'm trying to figure out, what your concentration, your kind of skew is, or if that's maybe not even the way that you think about it at all.
Mm-hmm.
Right?
Yeah. So if we were saying, 100% is devoted to global macro, and the other 100% is everything else.
Correct. Yeah.
I'd say probably I have a cap of 40% that I want to be allocated to illiquid investments.
Gotcha.
So, VC, real estate, and PE.
Yeah.
Being those.
Yeah.
Because I need liquidity
Yeah.
in order to support the global macro side.
Yeah. So when the opportunities come there, you want to be able to access the cash to get the size you need. Basically.
Yeah. Exactly.
Okay. Yeah.
And the rest, I would say probably 50% to hedge funds.
To hedge funds. And so I suppose a lot of people would be like wondering, wow, if you're returning that much, why invest in hedge funds? As you already gave us one of the reasons, which, it's also learning for you. You get to kind of outsource expertise, right? So, do you have maybe an example or two? Don't necessarily have to mention the hedge fund name, but why you chose, a specific kind of hedge fund strategy as an overlay already for what you're kind of doing. I guess I should also add, to your earlier point, there's also the time diversification, right? When you have stuff tied up in VC and PE, that also is accretive to having macro, which can be very, very short term and near, right? But going back on just, some maybe examples of why you picked certain types of hedge funds.
Yeah. I pick hedge funds to get me exposure that I probably can't get myself. For example, we have allocations in a couple China-focused hedge funds.
Yeah.
And I just don't know that much about the China market.
Yeah.
So I'm relying on them to deliver, alpha in that market. For other hedge funds, I think when I look at their track record, they've done exceptionally well. And not just in 1 year or 2 years, but across. You could see the consistent outperformance throughout their entire history.
Gotcha. So there's demonstrated returns.
Yeah.
Right.
So clearly they're doing something right.
Yeah.
Their approach to the market is right.
Yeah.
And I'm actually attracted to smaller fund managers who can be nimble, and you could tell that their focus is on the returns and not just on gathering capital.
Yeah. Yeah, I tend to find the game changes once they're sitting on a few billion, and then they just kind of go back to picking up the 2, and they kind of forget about the 20 being a big deal. Right?
Yeah, you don't want that.
Yeah.
And you can kind of tell when that's starting to happen.
Yeah. So just one other part here, and again, this external capital, if you will, right? And then we'll get into the nuts and bolts of what you're running directly. Because this has been a key thing that I've come across where not a lot of people probably don't have the chupas, the time, the passion, the drive, as well as just the hard work ethics to be really exceptional traders or investors, and that's totally fine, because I also think a lot of people don't respect how hard this business is, right, of compounding kind of money. And I generally think there's a lot of people who would really benefit from outsourcing their capital to other people who are fanatic and live and die for it, so to speak. But obviously then it's like, who do you do it to and who do you trust and so on. So you've mentioned as one thing where it sounds pretty obvious, but not everyone does it. You go back, you look at the track record, you see how they did, especially when the markets didn't do so well, right? And conversely also how well they did or how poorly when the markets rally. What else would you, let's say, look for before making a decision on a hedge fund manager out there? If there's someone watching this and they're like, okay, maybe I'll get some of that stratosphere trading family money to kind of back me. What would be some other things that you would consider as check in the box, so to speak? And I know a lot of this is also, it's not all science, right? There's also a bit of an art to it, right?
Yeah, it's very qualitative.
Yeah.
And sometimes I could be wrong about a manager, but I think you really have to figure out what that manager's edge is.
Yeah.
And it might not necessarily be like one singular edge. It could be, a lot of small edges all kind of combined into one. Maybe it's a different way of looking at the market. Maybe it's the fact that they're better risk managers. Yeah. Or they could just be intensely, passionate about what they do. And they look at, each stock in their portfolio much more closely than everyone else does.
Fair enough. All right. Thanks. So now on the juice, I'm sure your actual book that you're running, last time, we had an in-depth chat on this, and I've always been very much in admiration in your evolution, right? I no longer talk to you about anything in your trading tactical book, because literally you can change your position from me talking to you in the morning Asia time and once the US kicks in. So I just found that just way too frustrating. But so could you maybe explain, how do you think about how you run your own book, both the trading side as well as also the long-term kind of investing side, which I get the sense is a little bit more long only. But maybe give us a little bit kind of the framework, and then also give us a little bit of an idea of, again, the capital distribution. So assuming you have $100 for that side, right, that you're running.
Yeah. Well, where do I start?
Yeah.
I mean, a lot of what I do starts from having a good grasp on fundamentals of global macro. So I subscribe to a lot of research. In fact, I probably have better quality research and more access to research than maybe a lot of bank desks.
Yeah, and I think more importantly, you actually read it.
Yeah.
And go through it and dedicate the time for it, right?
Yeah, I mean, because I think that there's a high return on investment for paying for that research. So I spend a lot of time reading it. And once I have a fundamental backdrop, I've tried to figure out what's the best way to express it in any asset class. It could be FX, rates, commodities. And I think of where are the biggest, potential trades that have asymmetrical upside, right skew. Mm-hmm. And trades where momentum is in my favor.
Yeah.
Where I don't have to risk too much to make a lot. So I just try to think of, what asset, what security is going to move the most if my view of the world kind of, comes to fruition.
Yeah. And from a capital allocation on that, because everything you said here, you could also make arguments that it could fit in the trading book or the long-term kind of book, right? So how do you solve for that, or how do you think about that? I guess I should say, because I don't want to say that there's one solution to it, but just generally speaking, would it be $50 on the trading book, $50 on the other, or is it less on the long-term book and more on the trading book? Because I'm assuming you're taking much bigger size on the trading book because it's shorter. You're looking for shorter moves, but obviously correct me if the assumptions here are wrong.
Yeah.
Or maybe even if you'd like to kind of express this, is maybe you could tell us roughly how you were looking and thinking and positioned in January, and then like roughly how the evolution changed? Because obviously I believe this is your best year ever trading macro directly, right? And I believe when everyone was losing their shirt and getting their head blown off in March and April, you were actually making an absolute kind of killing. So I think that could be a great takeaway for people, just to see the change in the convexity of the book, right?
Yeah. Well, I would say in global macro, well, if we assume that, you know, half of my capital was allocated to global macro, all of my global macro views would be expressed on that side of the book.
Okay.
Definitely.
And this is the trading side of the book?
The trading side of the book,
Gotcha. Yeah.
And then I might make a few adjustments on the long-term side, maybe via ETFs or certain equity allocations, but that's pretty minor.
Gotcha.
I would say the biggest source of returns for my macro views have come from the trading side.
So in Jan, how was the long side? What was some of the things that you were holding, and what was your thinking then versus what the macro book was looking like? Because obviously in Jan, super bullish, phase one deal had just been signed, et cetera, right? The market seemed pretty euphoric, as was also the positioning, if I recall correctly, right?
Yeah.
On S&P kind of futures and so on. So
Yeah.
how did the snapshot of your book kind of look then? And
Yeah, it was a really fun time looking back on it. So I went into January of this year, pretty long equities in the long-term book, and I was also long S&P futures and S&P calls. I was bullish, just like everyone else.
Yeah.
Because the fundamentals were great.
Yes.
And I remember just thinking, just looking at price action and kind of looking at how this virus was sprouting up in China.
Yeah, because we were seeing it first here in Asia, firsthand, right? Yeah.
And so I started taking risk off the table. But actually, like, I didn't really start to get truly bearish until February.
Okay.
Bearish about the market, that
Sure.
is. So I remember the day I realized what was happening with the virus, January 24th. It's also my daughter's birthday. Look at how quickly this has impacted the economy of China. If this spreads across the world, you know, we could be in a totally different world within a month or two.
I still remember you and I comparing our Excel sheets, and we were kind of extrapolating the spreading of the contagion, right? And how quickly it could get, right?
Cases were going up 50% every day in China at one point.
Yeah.
I was like, wow, if you extrapolate this out, you have billions of people with COVID. Fortunately, that didn't happen.
Yes.
But I was like, okay, well, clearly the market does not realize this yet because the S&P was still grinding higher.
Yeah.
So sometime in February, I was like, you know what, I think the market is finally going to realize this. So I sold out my S&P's futures. I think it was like maybe 10 or 20 points from the high on that month.
Yeah.
And I started to go long treasuries, Eurodollar futures, Fed fund futures, because at the time, the Fed was saying we're comfortable with rates as they are.
Yeah.
There was about 140 basis points of interest rates, just priced in the curve.
Yeah.
And the markets, at least in the U.S., were saying everything's fine. So yeah, I mean, and I basically ran those rates positions all the way until the Fed cut to zero.
Wow.
Wow.
Yeah.
And so I was in treasuries at the beginning, shifted into Fed funds.
Yeah.
Shifted into long June Eurodollar futures.
Yeah.
And I remember at one point the Fed funds futures curve for April was not pricing in, was only pricing in, I think, 1 basis point of cuts. So you could have risked 1 basis point and made, like, I don't know, over 100
Yeah, so
basis
it's
points.
like
It would have been like
100x kind of type trade.
100x
Right?
kind of trade, yeah.
So when you see something like that, and obviously it's super clear to look back, but during the time, and I think it was also weird because, as you said, we could see it in Asia, and I think even initially the market in the U.S. and Europe did start to respond, and then it went back up and made new highs, right?
Yeah.
And it was just like, nah, this is just the crazy folks in Asia and so on and so forth. But but still, then when it's kind of the storm, and you have this high conviction that's literally screaming in your ear and no one else seems to see it. So how do you size into a situation like that, right? Because I don't think it's often that you come across, a potential payout where it could be 100x if you're correct, right?
Yeah. Yeah. So typically, my baseline kind of risk would be risking 1% of my total investable capital
Gotcha.
to a global macro trade.
Yeah.
Now, if I feel high conviction about it, I might risk more.
Yeah.
Or I might risk, 1% here, 1% there, 1% there on various versions of the trade.
Gotcha.
So if it pans out and I make, 10x of what I risked, then.
But I guess also the thing that's hard for people to really appreciate is, it's also where you set that 1% stop, right?
Yes.
Right. So you could be short from 100 or long from 100, but if your 1% is at 101 versus let's say 110, the sizing is very different, right?
Yeah.
Yeah. Okay.
So knowing where you're wrong.
Yeah.
Is pretty important.
So I'm assuming here you were pretty happy to have a pretty tight stop, so a pretty big position, right?
Yeah, it depends.
In this case, right?
I like the one reason I like rates, for example, is that often you know where you're wrong. Like for example, Fed funds that during March.
Yeah.
You knew the Fed wasn't going to hike rates.
Yeah.
So you know where you're wrong on that. But yeah, I mean, I might place stops at very key technical levels. Sometimes I might cut a position before it reaches my stop, just because, if price action or the fundamentals are not playing out as I planned, then I might just cut it. Sometimes I use options.
Yeah.
So I might, instead of risking, 1% loss at my entry point from where I stop out, I'll just put that risk and spend it on premium in an option. And that way I have a lot more leeway for the market to go against me if I'm wrong.
Yeah.
And a lot more leverage if it goes my way.
Okay. So as you said, pretty much held these positions until the Fed came in and had cut to zero. Now, all this time, the long part of the book, have you liquidated that? Have you just left that? And is that just, should we think of that as like long only equities, or how have you treated that?
I liquidated
Again,
everything.
From the capital need perspective for the trading side, was that what you're thinking? Yeah?
I was super bearish in March, and I liquidated everything that I could liquidate.
Okay.
All my ETFs.
Yeah.
And just anything that that was not tied down.
Yeah.
I didn't withdraw from any hedge funds.
Not like going around the house, pawn and stuff.
Yeah.
Okay.
But actually, that was a mistake. Because if I had just held on, I mean, everything would have just gone right back up.
Yeah. After the dip, right? Because that was actually going to be the kind of the next question is. And this was, I think, also the amazing thing with Ashvin, which was obviously the first interview we did for AVM, and you also know him, that he made money the first 5 months, which was basically super bullish, super bearish, and then back bullish again. So I think we started to bottom out around March, April, depending on what asset class you're looking at. How did you kind of come out of that? Were you just happy to sit on the excessive profits that you made? When did you start to get bullish or have bullish expressions in the macro book, or I should think of it as less bearish expressions?
Yeah. So my mistake this year was being bearish for a little bit longer than I should have.
You gave a little bit back.
Yeah. So in the long-term book, I had sold a lot of my ETFs and equities.
Yeah.
And I didn't get back in until June.
Yeah.
So obviously I missed the huge, like a large part of the rebound.
Okay.
And in the global macro trading book, I was still kind of positioned, in risk-off positions during that time.
Yeah.
Yeah, so that was frustrating.
No, it was. I mean, I can attest to that. I remember very kind of, I thought correctly, I still remember a weekend over speaking with Ash, where anticipating that the Fed was going to have to come in and back credit, right? But still thinking it was 2 weeks ahead, and it happened that exact Monday, right? And I think if they had not come in, the market probably would have closed down 20%. Maybe they would even have shut down the market. Yeah. But even though I got comfortable in bonds and credit, not potentially, but very strong probability of having a floor, I still couldn't make the mental leap of getting bullish in equities right then, right? But again, just goes to show how it seems very clear looking back, but then it did not. It really looked like we could do another 25 to 50% lower on S&P, right?
Yeah. I thought we were seeing a double dip scenario.
Yeah.
Like a bear market.
Yeah.
Bear market, dead cat bounce at the time.
So just takeaways from that scenario, because I look back, I look at my thinking, I look at kind of my macro journal, if you will, and the critique I have is I was probably listening to too many people and probably taking in too much input. And of course, when it's all bearish, it's sometimes very hard to make that leap of actually, wait a minute, people are way too bearish. And I only remember a few people catching the bullish turn. Interestingly enough, almost to a T, they're all credit guys and gals. Yeah. Which I thought was quite interesting, because I think that was the asset class that really got stretched and beaten up first. So they were kind of the first to kind of see out. But any other kind of takeaways on how you maybe could have optimized that situation in regards to your usual process?
Yeah, well.
And not to say that sometimes there's nothing to take away, right? It is just what it is, right? It comes with the territory.
Yeah.
Right?
I think when I look at my macro view and my process overall on the fundamentals, it's always, what are the economic fundamentals and where are they heading? And how ample is liquidity and where is that heading?
Yeah.
And at the time, I was focusing on the fundamentals, the economic fundamentals. And they were horrible, and they were getting worse.
Yeah.
But liquidity was unprecedented. It was historical, and I didn't fully understand like how would that affect the markets, because no one has ever seen so much fiscal and monetary stimulus unleashed in such a short amount of time.
We just knew it was epic, right? But yeah. Awesome.
So now we know the answer.
Yeah, clearly. Don't fight the Fed or the ECB or all the central banks in the world at the same time, right? Yeah. Okay, awesome. Anything else to add on this kind of segment of overall thinking of your framework on allocation? Clearly the long-only part of your book not being as long-only as we would have thought. Anything else maybe before we move to talking about the conservation works and so on?
Yeah, well, I think, so what's interesting and what's been a tremendous innovation in my strategy this year was that in June, I finally realized what was happening in terms of like why the market kept going higher. And I realized that the power of all the stimulus was going to be a lot bigger than what most people had imagined. So I flipped my view. I took the view that we're going to see a raging bull market, perhaps an equity bubble.
Yeah.
So I not only increased my equity allocation back to what I would consider like max, but I also started my own long-only equity strategy, single stocks, stock picking.
Yeah.
And I had never done this since probably 2000.
I remember actually critiquing you because I was like, is this the best use of your time, right? We went kind of a little bit back and forth, but how is that done so far?
I think it's done really well.
Yeah.
And I think I've surprised myself.
Yeah. So vastly obviously outperformed the main equity indices, I'm assuming.
Yeah.
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 Okay.
And I think...
And you quite enjoy it as well, I think, right?
I do.
Yeah.
I do, yeah.
Okay.
But I realized that a lot of the accumulated knowledge from, over 2 decades of trading,
Yeah.
plus the great managers that I invest in, and
Yeah.
just all that research that I've read has kind of, I'm bringing that to life.
Sure.
and applying it to the equity markets.
Yeah. Yeah.
So that has helped a lot.
So just on this point, and again, it's another thing that I love about the setup. At least my window looking into yours is you seem to be one of these few people who has created their trading and investment around the life they want to have, rather than I think tends to happen the other way around. People kind of create their life around their trading and kind of investing. First of all, push back if you think that is totally off. And obviously I'm not trying to say, when it's game time, right? That goes without saying. So that was just, I think, one thing that I wanted to get your thoughts on. And then the second one, if you're okay with it, could you maybe share a little bit of, what's a typical routine week for you from the perspective of, when do you do the best kind of thinking and heavy lifting on research? Is it charts? Is it ideas? Do you do a little bit every day? Do you segregate time? I'm just kind of, me, I'm an optimization junkie, right? So would love to get some takes on your process, if you're happy to share that.
Yeah. I mean, the way I structure my day, or at least try to structure it, is I do a lot of research and catching up with emails in
So is
the
that like
morning.
first segment of the day when you're
Yeah.
up? Yeah.
That's when my mind is sharpest.
Yeah.
That's also when I try to get my exercise in.
Yeah. What do you do? Is that like gym stuff, running?
Gym stuff.
Yeah. Okay.
Nothing crazy.
Yeah, no worries.
And then the afternoon is when when I'll schedule any meetings.
Yeah.
Then late afternoon till evening, try to spend time with family. And then after the kids go to bed, just go back to the markets.
Well, we are in Asia, so we got to be up for the U.S. Right?
Yeah.
Fair enough. Okay.
But what I found this year is that the growth in opportunities, and also the just due to all the different strategies and investments I've allocated to or committed to, it's taken a lot more of my time. So
yeah.
I think the next 6 to 12 months is trying to figure out how do I get back to a place of balance.
Yeah.
And how to live my life the way I want it, and not what the market is telling me to live, or what the opportunity set is telling me to live. To try to maybe bring a little bit more order to my life, and living and enjoying the present.
Sure. Well said. But again, it's been a super chaotic year, right? Super outrageous in each and every way. All right, well, let's switch lanes out a little bit, because I love that as I think you told me, one of the key passions that you also have from the investing and looking for returns is the more money you make, the more you can push it into the causes that you feel very passionate about. I wondered if you could just share with us, because I think this could resonate with a lot of people, right? Not everyone needs to trade or invest because they're already wealthy, right? But having that objective potentially can be something that can spur a lot of people. Let's talk a little bit about your interest and passion in conservation, as well as the rainforest part of things. I'd love you to give people context on why it calls out to you, give them a little bit of an overview of it, and then maybe we can also discuss the foundation that you and your rock star wife Angela have started, and also why. And again, I think it could be quite inspirational maybe for some people to see what else that they can do to see the change that they want to see in this world, right?
So the reason we started the Geo Chen Foundation, and by the way, this is kind of the culmination of a journey that started when I first wanted to become a trader. I guess I'll start with that. But when I first got into the markets, I realized this is something I really enjoy, something I'm really passionate about. But it doesn't have that much societal value, unfortunately. And I always wondered how I could translate, the gains that I make in the markets to bring like true value to the world. And this year, after finally starting the foundation, it's the culmination of basically that vision I had going back, a couple decades. And the reason we focus on nature is because, first of all, what is the point of working so hard and making all this money if you can't make the world a better place for your children, right? The children are the love of our lives. And if we can't improve their lives, their futures, then what is the point? Mm-hmm. Second of all, what we've learned this year is that money and capital is almost infinite. There's almost an infinite supply of money out there. But nature, rainforest, biodiversity, that is scarce. And it's getting scarcer every day. So why not take a resource that is plentiful and put it into something scarce? Mm-hmm. I mean, it just seems, very logical to me.
And by definition, that's good investing, right?
Yeah, exactly.
Right, because I think, you and I were talking about how the decay that we've seen in the biosphere actually makes nature that much more valuable with each passing kind of second.
Yeah.
So, no, I love it. Very well said. And more importantly, you're putting your capital where your mouth is, right? We'll link up also to the foundation in case there's people who maybe want to see if they can allocate or find out more as well on this. So, I guess on the final segment, if you will, we're sitting here, as we said, on the other side of knowing who's going to be the new president of the U.S. There's been some vaccine announcements, which we hear are going to be getting rolled out in some cases, even in weeks, at least the start, right? But that's obviously going to be a big theme of 2021. But when you kind of thinking now, back end of 2020, and let's maybe focus on a little bit big picture, what are your thoughts? Are you bullish? Are you bearish? Does that depend on the asset class? Does this depend on geography? I just want you to just speak kind of top of mind, right? And obviously everything is, as we've learned from this year, subject to what else is happening, right?
Yeah. So I think the key question for next year is how quickly and how much is the world going to go back to normal, and will normal economic activity come back? So obviously the vaccine is a key driver for this. And I think if you had asked anyone 3 months ago, are we going to have vaccines that work 90%? We weren't sure. Would vaccines have been rolled out, even on a limited basis, but rolled out at all
by the end of the year?
Yeah, by the end of the year. I think most people would have said no. Yeah. So what, the announcements over the vaccines are definitely a game changer for the market. Like, the market needs to move to price this in. Yeah. And I don't think it's done that yet. Yeah. So I think next year is going to be the process of the market pricing in this economic rebound. That's going to be a lot sooner and faster than the market originally expected. So how's this going to play out? I mean, I think, obviously this is bullish for equities. I think it's very bullish for natural resources, commodities, hard commodities.
Yeah.
So I think energy is going to do really well. Yeah. I think base metals will do really well next year. I think the rotation into cyclical stocks and value stocks has more to go. Small caps as well. Yeah. I think that's got a long runway.
Okay.
Yeah. And in terms of monetary policy and fiscal policy, I think we are going to see a lot more stimulus come out of the Fed and the Treasury, so fiscal and monetary policy.
Yeah.
So what we know is that we have an administration and a Democratic Party that wants to improve equality in the U.S., and they want to bring climate solutions with fiscal spending. So this requires, a lot more fiscal spending than what we're spending right now. It'll require coordination between the Treasury and the Fed. We have Powell and Yellen.
Yes, his old boss.
Right. They speak the same language.
Yeah.
They can make this happen. So the mix of fiscal and monetary policy, I think, is going to be very reflationary for assets. And also, when you have a Fed that has promised to stay behind the curve and keep rates low for a very long time, you're going to get real yields going more and more negative. So I think, this is very positive for precious metals,
Yeah.
gold, silver, and I actually count Bitcoin as a hard currency as well.
Yeah.
It's pretty positive for all of those. So I think, despite the amazing run-up we've seen in gold, silver, and crypto this year, I think we're going to see a lot more of it next year.
Okay. If we had to go, it's a little bit unfair, but if you had to pick one idea from each kind of asset class, what would your thoughts kind of be?
One idea from every asset
Yeah,
class.
that you think will kind of do best in 2021. Whether that is just one big bull run in the first quarter or second quarter or over the course of the year, however you want to kind of think about it. But if we just go through the asset class and you can only choose one in each asset class.
It's so hard.
Yeah, there you go. That's what I'm here for.
Well, for commodities, I think if you count crypto as a commodity,
Yeah.
What asset has the potential to go up 5x or 10x in a year? And you have to say it's crypto, right?
Yeah.
Bitcoin, Ethereum,
Yeah.
that has all the right skew characteristics. So if I had to express this reflationary view, it would definitely be in crypto.
Okay.
And not just that, but there are things happening in crypto right now where you're getting an acceleration in adoption by family offices and allocators.
Yeah.
Because all the infrastructure, the custody, the credit markets, it's all been built.
Yeah.
Like, you really have no excuse to not be invested in crypto.
Very different from 2017 and the last
Exactly.
bull run up, right?
Yeah.
Yeah.
You've had Paul Tudor Jones, Stanley Druckenmiller,
Yeah.
BlackRock, Fidelity,
Yeah.
all coming out to say that crypto is here to stay.
Yeah.
It's almost a question of who doesn't support crypto right
Sure,
now.
sure.
Maybe the SEC, but
Yeah.
whoever is in charge of the SEC is not going to be around forever.
Or as I like to say, would you be short it? And if you wouldn't
Exactly.
be short it, why are you not long? But
Yeah.
yeah,
And you have Square and PayPal
yeah,
adopting crypto, where anyone can just buy crypto on their phone and pay for coffee with it.
yeah.
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 So
That's commodity.
yeah.
If crypto's slotted there, how about equities?
Equities, I think, for the next 6 months, commodity equities, energy will do really well.
So energy, yeah,
Yeah, energy stocks have been beaten down
Yeah.
pretty hard. And I actually think there are a handful of energy companies that are really, they're making very concerted efforts to shift towards sustainable energy.
sure.
And I think they're going to be rewarded for it. So I think,
Do you have some names there that you're happy to share?
well,
Obviously, everyone will do their own heavy lifting and research, but I'm just kind of curious. So.
yeah, I don't want to put out any specific names.
Fair enough. Yeah.
Yeah. But I think you can do your research and find out who's really on the leading edge of
Yeah.
the energy industry.
Okay.
Yeah.
Currencies.
Currencies. Currency is a tough one. Maybe you can. Well, Is gold a currency?
Up to you.
I don't know. Silver a
This
currency?
interview is around you, man. You decide. We already put crypto in commodities, so I'm sure you can. But it's a good question.
I mean, what I do think is that the dollar bear market is going to resume.
Yeah.
Over the past 3 months, the dollar has taken a bit of breather,
Yeah.
but I think it's going to keep going lower. Exactly the same reasons I mentioned earlier.
Sure.
So it's a question of what do you like to buy against the dollar?
Yeah.
And many people have different views on that.
And what about on the duration side of things? So bonds, in essence.
Yeah, well,
There.
yeah. I find it difficult to believe that yields can stay this low on a 5-year time horizon. So I do think that treasury yields are going to jump maybe up to 1.4 in the 10-year.
Yeah.
As high as 1.4 at some point in the next 2 years. But it's just difficult to time when that's going to happen.
Yeah. That's a pretty big call, right? Because that's like almost double from these 80, 90 basis point levels where we've been trading, right? Okay.
I think it would take some crystallization of fiscal and more monetary stimulus for that to happen. Yeah. Maybe if we get a Democrat majority in the Senate, then I could see that happening. Yeah. But we'll see what happens with the Georgia Senate race.
Sure, yeah. Definitely the new year is already going to be starting with a bang, right? Jan 2nd, right? Yeah. So I guess, last question for me, and obviously feel free to share anything else you'd like, but, if you could have a billboard in every major downtown city across the world, what would you have on the billboard and why?
I mean, it would be something along the lines of, trying to spread the message of the urgency of of saving nature and saving rainforests. And for some people, maybe they've heard this a lot already. So, but I just think that more people need to align their spending, their investing, and their giving. They need to align all that with what is needed in the world in terms of
sustainability,
nature conservation, and sustainability. Yeah. I think we all need to be environmentalists because we all have the stake in the world and the future. It's not really an option to just go about our daily lives as if nothing was happening.
Yeah. I think that's been the great thing with COVID, right? It's been the great equalizer where it doesn't matter if you're a billionaire, you still can't fly anywhere, right? It didn't matter how much resources you kind of had. And I guess the big thing here is I think it's created a lot of empathy that was not there because people just didn't take out the time or didn't have the time frozen on them. And when I think about what you just said, like that's the thing I find is once people hear nature and conservation, a lot of people's eyes glaze over, as we've also seen with SoGal Ventures and backing women in the VC space that only get 2% of capital. And it's how do you create the empathy and the context for people to understand just the dire straits. So something that kind of can answer all of that in the billboard is what you'd aim for, right? So maybe a video reel or a picture before or after or something like that, right?
Yeah. I mean, I totally agree that empathy is important. I think there are a lot of people out there in the world that we just, can't really reach with this message because they're struggling on their own. They can't think about nature. They can't think about...
Yeah, they're just in execution mode. They just have to put something on the table for that day, right? Yeah. And I think also back to your point, like you don't need hundreds and hundreds of millions of dollars to move the needle. That you can actually make quite a bit of a change by just contributing what you can. Right?
Yeah, just changes in your lifestyle. Yeah. How do we make it easier for them to live more sustainable lives? Yeah. I think that's the question that we all need to answer. It's easy for people with a lot of money to just give to causes. Yeah. But for people who don't have money to give, how do we make it easier for them to live sustainably? It shouldn't be hard.
Yeah. So Geo, man, you and I could talk for weeks, but I don't want to get in trouble with Angela. So thank you so much for your time, and I hope to have you back in the next quarter in the new year, and then hopefully we'll just see what's top of your mind trade view wise, and get some updates on things.
Yeah, thank you. It's been a pleasure talking to you.
Absolutely, man.
Yeah.
Appreciate it.